The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Good morning, everybody. Tommy O'Brien with Tom O'Brien. We got the Dow negative 146. S&P is currently negative by 10. NASDAQ negative by 24. And markets are off to the races. We'll see if we get an 8th consecutive day in negative territory for the Dow. Good morning, Tom.
Hi, Tommy. How you doing?
Doing well, man. How are you?
Good. Oh, this is a fast move down.
Yeah.
Bottom line, when you were just doing that update, the S&Ps are only off 4 points. That was a quick 12 points down. Dow, of course, we're down 90. Now you're down $1.50. Gold reached that ABC structure on the way down. We actually went to 1262.50. 1267 was the ABC structure down, and we'll see how this shakes out. Right now, we're trading at that 1267. And then the notes and bonds, bottom line is that they want higher price. You get the 10-year note up 7 ticks, 119.27, 30-year bond up 15, 143.31. And good old King Dollar. King Dollar's giving it up this morning. Down 66 ticks, 99.650. And this dollar, man, I guess all the markets.
94.650, just to not put everybody in shock. You said 99.650. 94.650.
Yeah, I'd put myself in shock on that one. 94.650. And that move this morning at 8:10, that was pretty intense. Bottom line is that, you know, we had the dollar up at 95.220. Yeah. And just it came down, and it came down hard, man. So it's going to be intriguing to see if it actually gives up the ghost. You know, market-wise,
how about oil?
But
as I was doing that update, some serious oil action. I'm not sure what was spiking it, but literally as I was talking, it went from about 65 up to 65.40. And overnight, I believe it had to do with some of what was getting talked about in terms of Saudi Arabia, saying that they were going to propose hiking oil output of 1 million barrels a day. You had oil trading from 65.80 all the way down to 64.40. But we're almost back at that 65.80. We're only 40 cents away from that level right now.
Yeah, it's pretty intense. I was actually on the TD network this morning talking energy and talking oil, and it's hard to comprehend. You know, we had the drawdown yesterday. Bottom line is that oil didn't explode higher, but yet every time that it pulls back a bit, it just seems to want to stay at the 65, 66 level. Yeah. So, you know, we'll see how that baby shakes out. You know, it's volatility. We got it in spades. And I suspect what we're going to see out here, it's going to be about what does this good old U.S. dollar want to do? Is the U.S. dollar going to give it up? You know, the trade deal out there this morning. Now, this
you know what? Not to cut you off, Tom, but we have our man Kevin Hinks, and I want to get him in here this segment.
God.
I know, shame on us. We got him sitting here. Let's jump over. We got our man Kevin Hinks from TD Ameritrade Thinkorswim, folks. Right after our program every day, they have their TD Ameritrade swim lessons. Talk about the TD network, as you mentioned. That's where you were this morning, Tom. Kevin, good morning.
Morning, Kevin.
Good morning, guys.
How we doing this morning, man? So you guys were hanging out already this morning, huh?
Listening to you guys talk and watching these E-minis sell off as we speak here. You're right, Tom. This is a little morning swoon here that we have going on. We'll see if it catches legs or this just a little dip for buying mid-morning. But as we look here now, you know, we got the E-minis down 14 1/4, NASDAQ down 36. They're a little sell-off here, down about 177.
Yeah, you know what's going to be interesting, Kevin, and Tommy, is that the correlation of this U.S. dollar. You know, we had a really nice run on the dollar, and that move was so fast, like at 10 past 8 this morning. I'm saying to myself, okay, man, who sold that thing so quick? You know, I know, you had the pounds go up pretty dramatically, and I guess maybe it's the correlation of that. But what I'm trying to figure out right now is that, okay, so does a weaker dollar, does the market not like that? Do you know what I mean? Because those correlations, you know, they change and they stay the same, then they change again. So it's like it's definitely throwing volatility in the market, that's for sure.
Yeah, Tom, it was a pretty dramatic move right there between 8 and 8:10. We actually had the Philly Fed Business Outlook survey come out right then. But
I see.
It wasn't really a number, no, but it really wasn't a number that we thought should have moved the market like that. You know, it was a little bit of a miss and a little bit of a lower number, but you're coming off such historic highs in that reading that it wasn't a bad number. So I don't know why the dollar moved based on that. It had to be something else.
Yeah, pretty wild, man. And of course, the indices themselves, you know, that was a fast move. Now, each day, you know, the market has rejected those lows. We'll see how it shakes out now. I guess, you know, yesterday, Kevin, Daimler Chrysler, you know, that no doubt hit the DAX out here this morning. And, you know, now you're going to have, what's going to be intriguing is that now you're going to have Ross and Powell seem to be punching it out this morning. Ross said that no, you know, tariffs aren't going to do anything to the economy. Powell evidently came out last night saying that, hey, listen, we got to watch out for growth. That's going to be intriguing in itself. It's like, okay, you know, which side is this going to go on?
Yeah, I mean, you know, there's two different battles going on, and really that's what a healthy economy should do. I mean, think about it. Jerome Powell's job is not to really worry about growth. It's worried about inflation and unemployment, right? Wilbur Ross's job, he's doing his job, and both of them acting independently should do what's best for not only rates and the banking industry, but the economy in general. I think there's different wars being fought by different soldiers there.
Yeah, and just to swap gears on you, that's like the energy market, right? It's like, okay, we had that big drawdown yesterday, you know, on a small basis. Oil still, you know, you get that $1.50 move back and forth. So I guess we're going to have to wait till tomorrow and see what they're actually going to do between the Saudis and the Russians and Iran and Venezuela.
Well, we're getting closer to that announcement, and Tommy was right. I mean, I think oil was weak overnight and this morning because some of the numbers look like the production increases are drifting to the high end of the range, up around 500,000, 600,000, 700,000 barrels. So that would be probably putting a little bit of, you know, a little bit of a hood on top of crude oil trade. But that said, Tommy, as we're sitting here, crude oil rallies back, only down about 35 cents now.
It is remarkable. I mean, you're talking about at 10 o'clock last night Eastern time, we were trading up there at 65.75. And in the span of literally 12 hours, we're at 10:15 this morning. You go from 65.75 down below 64.40, and we're going to be right back up there by 10:30. Pretty cool.
And by 10:30,
it's going to be volatile here.
Yes.
Yeah, and by 10:30, we're going to get natural gas, right? Natural gas right now just hit $3.
Yeah, natural gas volatility as well, for sure. I mean, you're talking about going back to Tuesday, but Tuesday we were below 290, and 2 days later we're above $3, waiting for those inventories on natural gas as well. Yeah.
Yeah, if you're trading here, buckle up. I think this is nice big swings here.
That's for sure.
Buckle up, baby.
That's
listen,
for sure.
folks, right here, 45 minutes from now, you want to understand option strategies, futures. Kevin and his team, great program. If you haven't test driven yet the Thinkorswim platform, come over to our website, hit that banner, bring it up. You can trade along with Kevin and his team with the paper money. Kevin, you have a great one, safe one. We look forward to the show.
Thanks for having me, guys.
Thanks, Kevin.
Thanks so much. Stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials right now down 143. Nasdaq's off 29. S&Ps are off 13. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
We have the Dow Industrials right now down 145. You get the Nasdaq off 45. S&Ps are down 14. We take a look at the percentages out here, folks. Inside the indices, you have the Dow down 0.6%, Nasdaq down 0.6. S&Ps down 0.2. If we do go inside the Dow Industrials and take a look at the strength versus the weakness out here, you have the culprit out here. Boeing is Boeing's always up here. Boeing got a negative 36 points into the Dow. You got Caterpillar 21, 3M 20, putting positive into the Dow. You got Procter & Gamble putting 5 points, Verizon putting 5, Apple putting 5. Inside the NDX 100, we take a look at the NDX 100. What we have inside the NDX 100. Let's see what we got here. We got, let's see, Sirius Satellite down 4.2%. You got Dish off 2.7, Fastenal's off 2.6, and Tesla's down 2.5. Positive is Western Digital up 1.5. You get Fox up 1.4, AMAT 1.3, and Shire up 1.2.
You know, I was reading an article talking about the Dow, of course, and Boeing being the huge contributor on a daily basis to whether it's up or down points. And it was just an interesting article talking about how, of course, the Dow yesterday, right, GE getting pulled out, and you have Walgreens Boots getting put in. And the article was just talking about how you'll never see Facebook, Google, Amazon in the Dow, because the fear is that they're all so expensive, even a company like Facebook, that it might be as expensive as like Google in the thousands, right? You get Amazon at, what is it, 1,700 now. And if you ever had those equities, because it's a price-weighted index in the Dow, you could have two stocks representing literally 50, 60, 70% of the entire index. So the Dow is aware of that, and that's why you won't see a company like Facebook, for instance, even at $200, because the fear is that it's going to turn into a Google that'll be $1,000. And then you have a company like Walgreens Boots, for instance. What are they trading at? $60-something, where, I mean, just you get the point, right? It was just something interesting to think about, that you can't have, when you're dealing with an index that's price-weighted like that, an equity that's trading at $1,700 like Amazon. Otherwise, everything else is basically worthless.
You know what's amazing about that, Tommy and folks, is this. So picture, and I think that all of us have just got more educated in the markets over the course of years. When you actually look at it and understand it, how you just explained it, right? It doesn't even make any sense that it's a price-weighted index,
no,
right?
Of course.
It's like, yeah, I mean, it's really hard to understand.
I was just going to say, I feel like if you were in grade school and your teacher said, you know, create an index that was representative of the country, and you ever came to them and gave them 30 stocks and then said, we're going to weight it according to what their shares traded at, the teacher would be like, where did you get that idea? Why does that make any sense? That would be their reply, right? I mean, it should be, because it has no bearing in terms of, it should be, cap weighted, you know, as in, what's your market cap? Because that's what you're worth. Because as we talk about it many times, I mean, share price is basically an arbitrary value. Amazon, Netflix as well. Why not? They're trading at $400 plus today. But Amazon trading at $1,700. You could do a 100 for 1 stock split, and you'd be trading at $17. But the market cap doesn't change. That's what's, you know, it doesn't change the value of that company at all. Meanwhile, the share price got cut by 100. You know.
Amazing.
Okay. So it's Thursday. We got some action in the commodity. We got some action in the commodity markets for sure, natural gas included. You have oil making big moves today after there was a surprise draw in oil yesterday. So I got the Nadex platform up here. We're looking at the natural gas contract. We're looking at the July contract. And we're trading right at $3, which is going to be nice for this setup. So it's 10:22 right now. We're going to get those EIA numbers at 10:30 a.m. Eastern Time. We get those every Thursday for natural gas. And we've seen some volatility this morning, going from about 296 up to 3. And so what we're going to look at is potentially a volatility trade. We like to maybe set up both sides of this trade, look for a bullish spread, look for a bearish spread, and really we're just looking for some volatility on the inventory numbers that we get in about 7 minutes from right now. So Tom, I pulled this up ahead of time, and what's nice here is that all of the different time expirations are going to be able to choose a $3 spread that's where they begin at, which is nice because we have natural gas trading right at 3. So for instance, we'll pull up the 11 a.m.s first. These expire at 11 a.m.s. They're going to be the shortest time frame. And we're going to have 20 cents to the upside on our bullish spread. We're going to have 20 cents to the downside on our bearish spread. And again, as we say it, oil basically right at $3. So you're going to have essentially no intrinsic value on either of these.
Sweet.
Yeah, so the bullish spread's going to cost us about $11, which represents 11 cents above 3. And on the bearish side, it's going to be pretty similar. And we're just varying a little bit where you can see natural gas is slightly above 3. So maybe that's the difference here. And we have a bid-offer spread. But you're looking at about $20, give or take, as we oscillate around here. Right now, it'd be $19. So $19 represents 1.9 pennies, because this is ticking in basically tenths of a penny. And so you're looking at about $20, which would mean you need about 2 pennies of movement from $3 in either direction represents your break even, okay? So that's the 11 amps, which is nice. Now jump to the 12s. What's going to be cool here is same exact prices in terms of there's your bullish spread from 3 to 320. That one, instead of costing you about 10 or 11, is going to cost you about 14 now because we're adding an extra hour. That's the only difference. That's the only variable that changes, which is cool because normally there's so many different things that go into the price of an option, whether it's time, it's price, it's everything. These are identical except for one thing, which is you have till noon as opposed to 11. And you can see that now as we're ticking up again a little bit, we're almost at 301 now. But the bullish one costing us about $14 or $15. Bearish one costing us a similar 8. Bearish one, no intrinsic value at all. And so the noons are going to cost us about 22. Versus 19, okay?
Boy, so that's not bad.
It's not bad for that whole extra hour. And then one more final one. Let's jump to. Now, what's interesting here is we're going to have the 8 till 2:30s, okay, that provide you a 40-cent spread. But I'm going to jump right to the dailies, which get set basically last night, because those are a 50 cent spread. And what you'll see is, and just to jump to it for a good, because this is a great, example. Here's your 230 spread with exposure to 340 on the upside. Here's your 230 spread with exposure to 350, and they're trading identically. Okay, so if you were going to buy this spread, you'd be a fool to ever lock yourself in with a ceiling at 340 when you can buy the same exact trade with a ceiling to 350 if you ever got a move. And, you know, the reason why they're priced so similar, excuse me, is because the odds of that are very slim that you'd ever get a move above 340.
But it's not zero,
but exactly, it's not zero, and if you don't have to pay for it. So with that in mind, we're just going to pull up these Let me jump back to it, the larger 50-point ones. And what's nice again is that these, now they add 2.5 hours. Okay, you have till 2:30, but they also add a little bit of price difference, as in you have profit potential for 50 cents as opposed to 20. And so looking at these trades, you're looking at about $33 to make that, which would be 3.3 pennies a movement. Away from that $3 is what you need. Not bad in terms of, in general, you know, and again, you can always make these one directional or the other. We're right at $3, so that's what's nice. You just want to be bearish, you only got to put up 1.5 pennies, basically $15. We'll see. 2 to 3 pennies a movement is not that much when just looking at that chart. We've had 4 pennies a movement just prior to that number, just this morning alone.
Exactly. Stay right there, folks. Tommy and I come right back with those gas numbers. We have the Dow Industrials right now down 188. Nasdaq's off 63. S&Ps are down 20. Come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 172. You get the Nasdaq off 54. S&Ps are off 17. And what do we got with natural gas, Tom?
Yeah, quite a number. So I see it up there. We have a stockpile rise of 91 billion cubic feet. Median estimate was a rise of 86 billion cubic feet. So I got the chart up there. Natural gas spiking a bit lower. We were trading at $3 on the dot prior to coming into that number, and currently trading $2.97. So we dropped about almost 3 pennies on those numbers.
That's pretty cool.
Yeah, and you know, the trades we were looking at set up there was anywhere between just, you know, under 2 pennies to about just over 3 pennies, and that gives you exposure until 2.30. So, as in, okay, perfect. I see you have the numbers up here. So yeah, it seems like estimate was about 86 billion cubic feet, came in at 91, and they have the breakdown across the different regions in terms of the East, Midwest, Mountain, Pacific, and South Central. Interesting. Getting some.
When you're looking at that, I'm wondering, you see when you look at that, you got the mountain and the Pacific, like it's very small compared to the rest of the country. It's like, is that where the weather's coming in, that people need more natural gas for air conditioning? You know what I mean?
Sure, yeah. I have my AC guy showing up to my house either tomorrow or maybe Saturday morning. We got to get it fixed, man. I need some cold air because that Florida heat is coming, so I'll be one of those people.
Getting ready for the summer. Hey, today's the first day of summer.
It is. Summer solstice, right? You got it, man. Totally. So we'll check back on those natural gas numbers, jumping back to the chart one more time, hanging at about 297.70 right after that number. And we'll see, as we normally see on those numbers, natural gas definitely jumps around. And the nice thing about some of those trades, and we tend to gear towards the noons, because it's nice when you get some exposure for an hour and a half. I mean, oil was a great example yesterday in terms of the movement that we got from oil even after the 11 a.m., Tom. I'm not sure if you pulled it up, but oil eventually did rise yesterday after a little. Yeah, it's like those numbers, that draw eventually did play into the market. And I'm just going to pull up the chart as we pull it up, because that was an interesting, the way those EIAs played out yesterday. So I'm looking at the chart right here. Here's your 1030 number on the bar chart. On the chart, we're trading about 65.60. Oil oscillating a little bit, but look at that. Right at 11 o'clock, we're trading at 65.50, and by the span of 12 o'clock, we were trading at 66.35. Quite a move, and it took that half hour for it. But guess what? What happened at 12? Market fell apart from 66.30 down to all the way 65. That oil market, man. As we were talking to our man Kevin Hinks, talk about volatility.
Big time.
Yeah.
Hey, you talk about a little volatility. Watch this. I was just looking at this. Netflix, right? You know, that baby, 423, and we're not used to Netflix going south, but it's going to be interesting to see. I believe when I did this last night, I thought that there's 2 ABC structures. One of them was 424 and one was 434, I think. So this is going to be intriguing, you know, if in fact we're going to see some of these high flyers basically get sold down a bit. You know,
Netflix I was just going to say, they got another upgrade I saw from a different analyst. You had one saying $500 yesterday. You now have 2 analysts talking about $500 on Netflix, and, you know, not out of the ballpark in terms of the run it's had if it wants to jump up there. But, yeah, interesting. It's getting sold off a little bit this morning, down $5 at 411.
Let's go take a look at the rest of these high flyers. So Amazon, that's sold down too.
What's interesting about Amazon, I jumped to them. So I just saw headlines coming across that the Supreme Court had ruled that states can force retailers to charge taxes on their orders. So that's obviously an argument that Amazon always gets brought into. In reality, Amazon charging taxes for what they sell on, I believe, every item they sell. But what happens is that if you are an Amazon retailer where you're the one selling versus Amazon selling it from their warehouse, that's where the taxes still get a little complicated. So yeah, states can require internet tax collection, Supreme Court rules, and I wonder how that's going to play into Amazon's volatility this morning.
Yeah, you know what's intriguing about that? So picture, that's one of those deals that when Amazon, they fought that forever. And then even like the state of Florida, what they start charging us taxes maybe about 2 or 3 years ago. They made a deal with the state of Florida.
Yeah.
I don't know how many other deals they made, but they made deals. But that's, I mean, it was a smart business move, right? They fight it forever. Then you start making the deals because they're big enough that now they're all set, right?
Yeah, and I think they really knew it was coming down the pipeline in terms of even just public perception-wise, that if they were selling products that they were going to need to be charging taxes because they were just so big that to not be charging any taxes and be doing business basically within those states, even though you're not technically in them. But and that's where they do, and that's where you hear rhetoric. They charge taxes for the products that they are selling, which is a majority. I only buy Amazon Prime products really on there. But they do a bunch of business with products that aren't Amazon Prime, which is like a third-party seller. And that's where I believe they do not charge taxes, because it's basically a third-party seller that they're facilitating. And I wonder how that's going to play out into this as well. Yeah.
State's going to have more money.
Yeah. Yeah, and they probably should in those types of businesses, because guess what? E-commerce is going to be the future. And just because that might not be taking place in terms of the servers, might not be located directly within the state, the states would have a lot of problems if you start losing all that revenue in terms of sales, because that's where the future is, man. And
we know now that I mean, as one of the Tigers is saying in here, the bottom line is that we have warehouses probably in just about every state out there.
Correct, exactly. And that's what, it kind of is a physical presence, even if the servers aren't there, So that's why I think Amazon realized that was going to be a public perception battle they weren't going to win, and they got ahead of it with at least their own products. And I just wonder how it's going to play out into that third-party deal. Yeah.
Totally. If we go over to the NASDAQ for a second, you're going to see, we talk about a spread. We've just had a spread of $110 from the highs to the lows. 73.58 we hit this morning. We're at 72.50.
That's a lot of NASDAQ points in that tech sector, man. That is a big number.
You know what's amazing about the NASDAQ, folks, is that when you look at the NASDAQ, especially if you're trading the futures, or just the Qs in general, it seems like they'll never go down, and it seems like everything is like far away, whether they're high highs or low lows, right? And then all of a sudden, like if it either breaks topside or breaks down, it's vicious, man. I mean, it's like, it just goes. And when it goes, I mean, everything goes.
It's remarkable that the Dow is shooting for its 8th negative day. I mean, I feel like I'm completely unaware of that. Meanwhile, we do a show every morning. It's it's a sly move. Everything's been pretty calm. Nothing too dramatic. But I saw that headline. I saw it yesterday, too. But I just said, man, I can't, it's almost, I wasn't aware just in my own head that we've been negative for 7 days in the Dow, which is remarkable that you'd feel like the market is still kind of going up, and that's probably because NASDAQ making highs. So, my head's a little bit confused in that manner, right, where the markets are okay, tech sector especially. But, yeah, Dow shooting for the 8th straight day in negative territory.
Yeah, and then we had, the small caps. This is like the first day the small caps getting hit. That's, the Russell's, well, the IWM's off $1.60. We'll see if that ends up with any traction on the way down. But right now, it definitely has the traction. Now, just the opposite, what has happened in the last few minutes when we're talking, gold is catching a bid. So it's going to be intriguing here, watching this baby shake out. We're still down 580. You're at 1268. That being said, though, bottom line is that if we see reversals all over the place out here today, this market's getting a little bit nervous.
Well, talking about those markets, our man Jack Leeson from Major League Trading's coming up. He sent over 3 charts. He's got the Russell, he's got the S&P, and I believe he's got the Dow. So that was a perfect segue. We'll come right back with Jack. Stay tuned, folks. We'll be back in 3 minutes.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Tommy O'Brien with Tom O'Brien, and we got a treat. We're joined by our man Jack Gleason this morning, Major League Trading. Jack, good morning. Welcome back to TFNN.
Morning, Jack.
Good morning, guys. How's it going?
It's going great, man. How are you?
Good. It's pouring rain in Chicago here right now, so I'm hoping for a little bit of sunshine. You guys could send it my way from Florida. That'd be great.
Summer solstice, first day of summer. We'll get some sun over there, man. You'll get some beautiful rain. The trees will be green. The grass will be growing. That's the way to start off the summer, right?
Yeah, that's right. I'm going to a Grateful Dead concert with my dad Saturday to celebrate a late Father's Day, because my dad was actually down in Florida for Father's Day. So I'm kicking it right way.
Man.
Fantastic, man. My dad and I, we love going to concerts, man. We've hit up U2. We've hit up Dave Matthews, man. Gotta love it. That's a great Father's Day, man. Perfect. Grateful Dead. Enjoy.
Super cool. John Mayer, too. So
nice. I like John Mayer. That's a good, I know. He's touring with the Dead now. That's pretty sweet. It is, yeah. So, back to markets, man. We got some markets for sure, Jack. I know you sent over a few charts looking at some of the indices. I got those charts. So what are you looking at this week, this morning? Talk to us.
Okay, cool. So which chart are we going to start with, just so I can pull it up?
You tell me. I got them all, man. I know you got the Russell, right? You got the Dow. Where are we starting?
Russell.
Okay, perfect.
Russell. So I sent that chart over this morning. You can see there's a gap, obviously, between where we're currently trading and where that chart is, where I sent the first level support I was looking for in Russell was at 1691.4. Right now, the low of the day is, I believe, about like 4 ticks just below that. So I needed to come on about 15 minutes earlier when that support level. But we got that 1691.4, and that's a 38% retracement from the breakout of the last swing high. And that breakout of that day, I'm just going back on my chart here, was, let's see here, that was on the 22nd. Now, typically what we'll do is react off that 38.2, and you can see that reaction. Anytime I have a level that I've drawn up and we're reacting, you know, to the tick or within a couple of ticks, I know that there's some kind of computer program spy in there. So if we do make that next wave lower, the level I'm going to want to watch and the level you guys are going to want to mark up is going to be 1682.3. I have my support zone set up there. And if you guys remember last week, I believe it was the 2768 support level I talked about, trading in the S&P 500. We traded 2766, so we dipped 2 points. followed up by a 19-point rally. So, a lot of times those are the types of reactions I'm looking for this. And then we can move on to the Dow now that you guys have those levels.
Just real quick, Jack, just real quick. Just so that's 1691. So that was a 382 retracement?
Yeah, it's a 382 from the previous high, the breakout. It's called an extension series. It's something I teach in my fib course.
And where is the 1682? Does that correlate to a fib number?
1682 is also going to be, that's the 50% retracement.
50,
so when you do get these breakout bull runs, especially, the Russell's been the strongest market here, and the Dow's been the weakest. You'll have these high-to-high draws retest or test off the 38% retracement. It's kind of something that nobody really looks at. And then if we do bounce off that, if we come in for the second test, I won't look to trade the second test. Instead, I'll wait for us to fall all the way back down to that 50% retracement. Nice. That level is at 1682.3, where I have my next alert sent, and the market's still looking weak. So I think there's a possibility we end up trading those levels.
And it's pretty cool we got back down there in like the 5 minutes in between you sending over those charts and coming on the air.
Yeah.
Right? Okay, jumping over to the Dow. We got it up.
Okay, cool. Let me pull it up here then too. So the Dow is going to, obviously the Dow's been the weaker market. So that's probably going to be the last one to turn. But also I'm thinking that the rest of these markets won't end up producing a rally until the Dow can actually find its support level. It's led the entire market down here, kind of been telegraphing this reversal. So I'm looking at a couple of different halfway back longs, and there's two different swing lows we've had this year, which just gives me a general zone that I'm paying attention to. Now, the first level I'm going to be watching is 24,443, and that is the halfway back from the most recent daily swing low, and that's just a traditional move. That is from the low of the 3rd of May to high. Cool. And then if you go to the low of the 2nd of April to high, that's where I have that green box drawn up there. That level is 24,368. So I'm going to be looking for buying pressure to come in there, and you can see in late May, that's really where the market bottomed out and actually began, finding some support levels. So I'm expecting us to retest there, and I really wouldn't be eager to get long the Dow or really any of the other markets until we start trading those levels. So I think that's pretty significant for us to trade, and it's just a matter of time before we test those levels. So that's what I'll be watching in the Dow.
That's nice, man. I know, Tom, are you looking at that chart? Because that's a confluence deal of two different Fibonacci trends, right? And Tom loved those, Jack. He's a big fan. So I'm looking at those, two different Fibonacci retracement levels and where that zone is, and that's where it's nice. You have that marked out with that green box.
And in particular, we that Dow's been so weak. I mean, if that can turn, well, that's going to give the other one some oomph. There's no doubt about that. But it's pretty amazing when you think about that. The Dow actually has topped out January. So we'll see where this shakes out.
GE out this week. Have they mentioned who they're going to be bringing into the Dow?
Yeah, it's going to be Walgreens Boots. Walgreens Boots is going to be in there to replace them.
Cool.
Health sector taking over the world, Jack. That's what's happening.
Yeah, for you guys. You guys probably spending 20%, what do they say, 20% of GDPs now on healthcare. I'm still young and healthy, but I know one day I'll be burning through all my cash.
The numbers are crazy. I hear you. They're almost unfathomable. Okay, so we got 2 minutes. Where are we jumping to? What's the third one? What are we looking at?
S&P 500.
Perfect.
And then for that, the biggest level I have, which we've actually already tested, so it'd be a second test, is the 2735 zone. We tested it in the overnight session. Typically, I like to see these levels test during the regular trading hours session, so you have fills on all the time frames. You have a higher volume bottom. A lot of times when we trade those levels in the overnight session, we can come down and retest, so SPY buyers can get in, stock buyers can get in. So 2735, 2736 is going to be that halfway back long from that swing low that you have up on the chart. And then if we do not hold that, the next level I'm going to be looking at is 2715. And once again, these are try to come on with the bigger support and resistance levels that really aren't going to change from a day-to-day basis because they're swing lows to highs. But the low of the 29th to high is at 2736 support. And then I have a different high-to-high sequence that's held every time we come into our 50% retracement, and that's the 2718. So I have alerts set at both of those levels, and that's where I'm expecting the S&P to come in and bottom.
Nice.
Jack, when we take the low from last night, I guess that's 2735. When we break the 0.618, are you looking to go all the way back to that low? How do you look at that?
So when we break a 61.8, I consider that a trend failure, and I'll begin observing the opposing trend. So if we were to break the 61.8 of that swing low draw from the 29 to high, I would then actually begin pulling it halfway back, at least for observation, from the high of the 12th, which is the current high, the S&P 500 on the most recent move up. So I would take that high to low measure and continue to draw it until we pulled into that halfway back short. And at that point in time, I'd consider that a valid shorting opportunity, at least for an observation for a single day trade.
You gotta love it, man.
Jack, that's awesome, man. Thank you for the charts. Thanks for doing the work, getting ready, and for the great information for the listeners and viewers. Folks, Jack Gleason, MajorLeagueTrading.com. Check him out over there. Sign up. Jack, have a great time at the Dead with your dad, man.
Jack, have a great one, a safe one. Thanks so much, man.
Take care.
You too. We'll come right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Tommy O'Brien with Tom O'Brien. We got the Dow -143, NASDAQ -49, S&P's -14. So we're nearing the 11 a.m. end of the program, Tom. Let's jump back to natural gas, check in on the volatility. So we saw that spike lower right off of the inventory number at 1030, and from there we've just kind of been hanging around at 298. So what's interesting is the 11 a.m. expiration spreads we're looking at. You needed about We'll call it 2 pennies.
2 pennies.
Yeah, it was like 1.9 pennies. You needed 2 pennies, basically. And we're close to that level, coming in with 5 minutes left in the 11 a.m.s. You only needed about 2.3 pennies in terms of $23 for the noon. And for the 2:30s, you needed about 3 to 3.5 pennies, depending on where that's set up. So we'll see. But like we looked at for oil yesterday, man, you can always get some action throughout the day, especially with the type of action we've been seeing in these commodities. Natural gas, just to pull it back, you don't have to go back that far in terms of just volatility across the board on that chart. So we'll see. Kind of a tame market in the last half hour. But not a bad trade in terms of you get a 2 penny move right off the bat, and 2 pennies was kind of essentially, you know, very little premium in those products this morning, which would have been nice when you see the type of move you need is not too dramatic for the move we got, and that was not really too big of a miss on those numbers too, in terms of.
And what's so clean about that is that we had, of course, the 11, the 12, and the 2:30s, all at 3.
Yeah.
So
they all line up with the same price.
How much time do you want?
It's nice when you literally get to see how much does that hour cost me. Well, guess what?
Yes.
We know exactly how much that hour costs you, and that's where you get to make the decision. Is it worth it? Is it worth it? You know, and you get to just, it's easily quantifiable. Do you want to pay for that extra hour till noon? Do you want to pay for the extra hour till 2:30? And you get to make those decisions depending on your market bias. Pretty cool.
Get over to our website, folks, at TFNN, hit the Nadex platform, bring it up, and that's why we go through these so you can see how these different contracts act and react.
And we got OPEC tomorrow, man. Oil. That'll be a cool trade. We'll see what happens. Awesome, man. Okay.
Okay, have a great one, man. Have a safe one.
Thanks, man. You too. Love you. Okay.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.